Are you nuts?
Good morning, everyone. This is Financial Literacy 101. Today, we have quite a bit to talk about when it comes to certain stocks that are making major moves in the market. And also, we have two types of lists. We're going to talk about Discovery, ViacomCBS. We're also going to discuss Credit Suisse, PayPal, as well as Roku. But then there's a whole slew of other stocks that the Wall Street bets groups are actually getting to. I'm looking at what they call the stonks, the top stonks. Basically, stocks that they're essentially controlling. That's GameStop, of course. Now they're into rocket companies, Powell Technologies, the S, which is S&P 500, Tesla. That explains a lot what's going on with Tesla. AMC, of course, ViacomCBS, Apple. This is about to be very, very dangerous and very, very profitable at the same time. Let's get into it. So we understand that the Wall Street bets groups have essentially came on the scene and pretty much have been controlling majority of the stocks that we're seeing. But before we get into that particular group, I think it's important that we go over to some stocks that's making some moves, because we understand that the market is now hot. The market is now live. So before we get into that, let's go ahead and let's get into let's talk about Discovery. Okay. Right now, Discovery is up. As I told you, these stocks that we're going over today should be making major moves. And Discovery is already up, looking like it's almost going to hit 4% today. All right. Over the past 5 years. Okay. I hit something wrong. Give me a second. There we go. The past 5 years, the stock has been up 53%. The past year, 129%. The past 3 months, about 45%. That was the past 3 months. This is the past month. So it's been down around 28%, 27%. The past week, down almost 40%. And then today, they're currently up, like I said, almost 5%. So they're doing pretty well. We're just going to look at some things, no dividends. We're going to go right through these, ladies and gentlemen. And again, here's a story that came out talking about these very same stocks that I was researching. So that's pretty good. And they said that traders are glued to their screens and set for a volatile opening. Many stocks are going to hit hard. Buy is 23%, hold at 62%, sell at 15%. Okay. We're going to just do a stock talk today. So we're going to go run through these stocks very quickly, and then we're going to start having a discussion. Now, here's the other Discovery stock. As you notice, the ticker for this particular stock right here, ladies and gentlemen, so you guys can put this part of your portfolio. The ticker and symbol for this one is DISCA. That's DISCA. And the other Discovery stock is DISCK. Again, that is DISCK. One is listed at $43 a share, and this one is listed at $36 a share. Let's look how this stock has been performing. Past 5 years, been up 35%. The past year, up 114%. The past 3 months, 38%. The past month, down 27%. The last week, down 42%. And then today, they're up 3%. So slightly behind the other Discovery stock. Again, they have 9,800 employees, no dividends back in 1982. What else is pertinent to know here? Looking at the same news as before, same headlines. This one has hold at 60, buy at 24, sell at 16. And of course, the other Discovery stock is right here, 62% hold. Moving right along. ViacomCBS. Believe it or not, I think this could be a very valuable stock later on. But in the past 5 years, the stock has been down almost 15%. The past year, the stock has been up 256%. The past 3 months, 26%. The past month, down 33%. The past week, down 45%. And then today, they are doing well. these are the ones that are making the moves in the market right now, where a lot of day traders are actually getting into this particular field and trading on a high volume and then selling them later on in the afternoon or maybe within an hour or two. And what we need to understand that when people talk about day trading, some day traders trade throughout the entire trading day, but a lot of day traders who make a lot of money very quickly, they trade no more than 1 to 2, possibly even 3 hours. Most day traders that's making millions of dollars because they're making 1 or 2 trades a day, they're not trading no more than 3 hours. They're just waiting for a certain price point because they do the analytics and math about how they can make more money. So essentially, they play the odds, okay? They play the odds. Now, with this particular stock, as you can tell, ViacomCBS, we understand what they actually are into. They're into everything media, okay? You know, saying that Viacom also owns BET. I don't know if you guys knew that as well. So it's no longer black owned, but nonetheless, this stock has dividends at 2%. So you guys can definitely go over to Market Watch and type in the symbol for ViacomCBS at VIAC. That's a symbol. That's a ticker, VIAC. And that will tell you the dividends. Now, for this particular stock, looking at the analyst rating of buy 19, hold at 50%, sell at 31%, this goes over my positioning of what I like to look at, meaning I don't like sell anything over 25%. When I see analyst rating over 25%, I'm really hesitant to investing in that particular stock. And we're going to get into why ViacomCBS is very, very vital, and you might want to keep a close look at it. All right, let's look at what else is here. We got Wells Fargo, Discovery, AT&T, MG Resorts. Let's move on. We got Credit Suisse. So with this particular stock, it's been moving. So the past 5 years been down 24%. The past year, up 34%. The past 3 months, down 14%. The past month, down 21%. The past week, down 15%. And today, they're even down. So out of all of these stocks that they're talking about are going to have big movements, big sways, volatility. This is the one stock that has not rebounded like they thought it was going to rebound. This stock is essentially out of Zurich with 48,000 employees and has 2.05 dividend yield. Okay. And again, it says Credit Suisse shares crawl higher after Monday drop. One analyst cuts EPS due by 47%. And EPS is the earnings per share. That is why you see that now. So this came out 6 hours ago, and you see in the opening market that the stock is actually down because this particular analyst rating said it's cutting the EPS due by 47%. And what that simply means is EPS is earnings per share, meaning that this particular stock, because of the dividends, the intrinsic value of it is being cut. That's already an indicator that this stock is going to be down. Now, what's profitable about this is that we always want to buy low and sell high. So with that being said, these ones that are ticking, if you would have bought it in the pre-market, if you would have bought it with the market as soon as the market opened, you would have made the money on the uptick versus on the downtick. But now that this stock is downtick, now this is where you do your research. This is where you do your analysis. This is where you look into your partnerships, your contracts, and your deals to see if they're going to essentially grow the company. If they're going to grow the company, then you should invest. If not, then you should hold if you have this particular stock or not. Very important, okay? Credit Suisse stock buybacks directly affected by hedge fund liquidation analysts. That's another piece of pertinent news that you should be looking at. But this is very interesting. The buy is 57, the hold is 43, and 0 sell. So with this particular one, I'm going to take a little more time because the analyst has a strong point here, but I want to read the bulls. It says Credit Suisse has run down a massive book of European 126 billion to euro 45 billion over the past 4 years, incurring pre-tax losses of euro 16 billion in the process. This has obscured the performance and profitability of the core business. Credit Suisse looks set to emulate UBS and transform its business model into a wealth manager with a complementary investment bank, which would increase profitability and reduce earnings volatility. It said Credit Suisse generates the bulk of its earnings in stable and low-risk private banking, wealth management, and Swiss commercial banking. That is the one key. Let me see if you guys can see this. Let me blow this up. This one paragraph here says it all. It generates the bulk of its earnings in stable, low risk private banking, wealth management, and Swiss commercial banking. Very, very important. Okay. People in this sector as well. Bank of America, Wells Fargo. Let's move on. PayPal. Now, this could be some out of you guys' price range, but nonetheless, PayPal has been an intricate entity in the banking and also payment world. So let's look over it very quickly. The past 5 years, PayPal has been up over 500% the past year, 146% the past 3 months, only looked like 1% the past month, down 10%, the past week, down 5%. And then today, they're actually ticking down. PayPal has no dividends, and they have roughly 26,000 employees, and they founded back in 1998. Some of the news here that came out in the past day, it says here that PayPal rolls out crypto checkout feature in the US. Again, I told you one of the major components of your investments is looking at innovation, invention, product development. All of these are essentially inputs to deliverables of a company's earnings and output if you look at futuristic investing. I said a lot of stuff, didn't I? Let me back it up. Because a company is growing, whether there's innovation, new processes, and inventions, it's probably a good stock that you should buy and hold long term. That's all I said. But nonetheless, it says exclusive PayPal launches crypto checkout service. That's pretty good. It said you should own PayPal, don't trade it. You see this? Does everyone see this? You should own PayPal, don't trade it. And one of the, I guess, important things about certain investment platforms, even Fidelity, Charles Schwab, E-Trade, Robinhood here, WeBull, M1 Finance, all of these. There's ways to invest in any stock, no matter the price point. So that's why I tell people, don't look at Bitcoin, don't look at PayPal, don't look at these stocks that are $500, $600, $700 and like, oh, I don't have enough money to invest. Again, you need $5 or more. $5 or more. You're like, yeah, man, you know, I got a third of a stock in this, if I got 10 stock in that one. You need to have a world diversified credit portfolio. Excuse me, that doesn't mean all individual stocks like Tesla, Apple, Google, PayPal. No. It means that you need to have diversified stocks like this in different industries, okay? Whether it be tech, railroads, the banking systems, okay? Food industry, pharmaceuticals. There's so many sectors of a diversified portfolio that you can have. But again, the base of your credit portfolio is your what? Your bonds, your ETFs, your index, your precious metals, and your commodities. Okay, like, you know, beef and oil, things of that nature. That should be essentially the base, a foundation of your portfolio. Because, ladies and gentlemen, if you don't have a foundation for your portfolio, it will fall. There's no doubt about it. Okay, let's move right along to Roku. Roku is ticking around $300 a day, up 1%. In the past 5 years, Roku has been up 1,800%. Again, Roku has been up 1,800% the past year. It's been up 241% the past 3 months, down 11% the past month, down 23% the past week, down 12%. And then today, they're currently up about 1%. Okay. Now, Roku roughly has 2,000 employees that came back in 2002. They have no dividends, and the buy is 65%, the hold is 27%, and the sell is 8%. Now, with this particular one, because ladies and gentlemen, the only people in this round with Roku is the Amazon Fire Stick. They're the only ones doing this. But I can tell you right now, I had a Roku, and it's good. It's good. But you can't fire break it. I mean, like the Amazon Fire Stick, you can't root it like you can an Android phone. Okay, so essentially that's the reason why I didn't really buy Roku's. I bought Amazon Fire Sticks, because there's so many things you can do with that Fire Stick. When it comes to Roku, I don't know if they're going to change their proprietary software or not, so you can do the same things you can do on your Fire Stick versus this. But nonetheless, they have been a very profitable company. Now, when I'm looking at the sell rate of 8% and hold at 27%, I must read what the bulls are saying because I think it's going to give us some insight of why we should continue to buy this stock or at least hold this stock. Okay, so let's look into this very, very closely. It says Roku is well positioned to take advantage of the secular trend toward increased content streaming in the US and abroad. That's absolutely true. Because I believe in certain market spaces, even with all of these apps like HBO Max and Hulu and Amazon Prime Video and Netflix and Vudu, and you got all of these apps that you guys can subscribe to and absolutely play. Like NBC has a paid subscription service, and CBS, even some of the public channels that we essentially didn't pay for, you can pay for because now they're specializing their content. But nonetheless, Roku and the Fire Stick are the two entities in this space. And I don't know if they're competing because I believe their interface and their platforms are different in a sense, okay? Are very, very different. I just believe that the Amazon Fire Stick offers more. But anyway, when it comes to investing, it says here that Roku streaming service neutral stance will continue to attract both new streaming services and customers. Right here, you see this? They have a new streaming service. Again, innovation, development, growth. They're offering new products. Again, when you start thinking about futuristic, you're thinking about long-term stocks, you think about holding, this is what you want to hear. Absolutely, there's no doubt about it. Roku streaming service, neutral stance will continue to attract both new streaming services and customers. Roku will be able to leverage its growing active account base to get better. Okay, that's what they're talking about. That's what they're referring to. People in this, none of these really, but nonetheless, let's move on. Now, this next list, we're going to have to kind of shift to the right of the screen. We may look at some of these stocks like Neo, Discovery, and again, this Wall Street Best Group is kind of like, I'm trying to find a word that means evil and good. Maybe they're the Robin Hood. Maybe they're the true Robin Hoods. I don't know. But I'm tending not to deal with any stocks they're involved with. But here's the thing, ladies and gentlemen, they are definitely growing. This Wall Street Bets Group is growing. And I don't mean like in numbers, because I'm a part of this group, but I'm not a part of the investors that are actually controlling certain stocks. I won't say the stock market, but they are controlling the stocks. And here's the thing. In retrospect, if you can control a large nucleus of stocks, then you possibly can control the stock market. I always ask this questions to people, and a lot of you guys in the chat can actually answer this question. Who is more powerful? The person who is in the position of power or the person who can influence the power position? Think about that. Who is more powerful? The person who's in the position of power or the person who can influence the power of a position or the position of power? Think about that. We got good morning, Copper, good morning, Prime X, and good morning, Miss One. Exactly. People can jailbreak the Fire Stick. And jailbreaking the Fire Stick, ladies and gentlemen, here's the thing. That terminology is slightly off because you don't really fire break or jailbreak or root the Fire Stick. You know why? You go into the settings and you say allow third-party apps, unknown third-party apps to be installed. That's it. And through that one option, it allows you to download any app that's in an APK format. Think about that. It allows you to download any app in an APK format. So essentially, you don't really jailbreak. You just select an option and it allows you to download whatever you want. That's all. Let's see here. Good morning, D General. Now, Prime X says influencers. If you say so, when I'm looking at these stocks here, we're off to the right, family. GameStop, Rocket Companies, Paltar Technologies, Tesla, AMC, Viacom. Let me blow this up. There we go. I hate that it's to the right, but this is where they have it listed, okay? But these are the stocks that they're essentially controlling here. Look, it says right here, Wall Street's trending stocks. Wall Street bets trending stocks. GameStop, Rocket, Palantir, SPY, Tesla. So let's look at a very popular one like Tesla. Let's look at Tesla. TSLA. Let's look at it. Let's see if it's ticking up today. Nope. Down. Let's look in the past week. Let's look at it. Nope. Down. But again, this is one of the stocks. Let's look at NEO. NEO used to be one of my favorites. I mean, it's still one of my favorites, but they have not been doing well. And I know why. Look at this. $35 a share. Now, if you notice, I used to have like over 100 shares. You see right now I only have roughly like 8, and I'm still down 20%. So the question is that these stocks that are listed on the Wall Street bets trending stocks, there's other pertinent information that you need to know. Like, why is NEO that was on a trajectory of hitting $60 is down to $35? Where, if you guys didn't know, there's a shortage of semiconductors, aka microchips. Yeah, there's a shortage of it. Let me see if they listed here one of the causes. They used to have this kind of in their news. Let's see, pop machine. Oh, but again, do I believe that you should invest in NEO? Yes, 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 yes. Now, this is what NEO is doing. This is what NEO is doing. It said NEO looked to expand EV charging infrastructure in partnership. Okay, what did I tell you? Partnerships are very important with Germany Metro. It also says here, NEO, Exxon filed for Hong Kong listing. They're about to go public on the Hong Kong stock market. So it says NEO confident its plant in Hefei will restart production after 5-day shutdown. So they're opening back up one of their factories. Now, the reason why they shut down this factory is because simply the lack of semiconductors, the lack of microchips. They absolutely needed these microchips in order to produce their cars. So again, if you guys are looking, me, myself, and I, 3 people. No. But I think I may go in, and because NEO is down, I think I'm gonna go ahead and probably drop some money in NEO. My option is not looking too good, as you guys can tell. I have one contract valued at $170. Okay, it expires, thank God, in June at a $50 call. Okay, so I do believe that NEO will bounce back, and I'm actually hoping that it will. But with that being said, I think that it's important. Okay, that I go ahead and invest while NEO is down. Maybe just $100. It's only going to give me 2.8 shares. But nonetheless, I'm going to, okay, I got a deposit fund. Here we go, Robinhood. Here we go. I'm going to do 120. Just for giggles. Here we go. I'm going to invest a little bit of money into Robinhood. Review the order. There we go. And voila. There it is. It's been executed. Come back over here. These stocks just changed from 9.7 to around 12. Let me do a refresh. Make sure they took my order and it's been executed. I'm gonna build back my portfolio upon NEO based upon current news. There we are, 12, like I said, 12.5. So we're back in NEO. Let's go back. A lot of you guys have been asking about AMC. Let's look at AMC on this particular website here. Let's see here. AMC 7-day volatility. So at one point, AMC, look at this. This is what scares me about these stocks. You see, by this group investing in these stocks, it's like, again, it's like a blessing and a curse. It's good and it's bad. It's yin and it's yang. I can go all day. It's up and it's down. It's left or it's right. Because when they go into these stocks, they're buying hundreds of thousands of shares, which absolutely change the whole entire it's hard for me to even just grasp the words to try to explain this to you, because let's say for instance 20 people in this group, and they're all buying like 100,000 shares. Okay, maybe when we look at AMC has, take for instance 8 million shares of their stock. If a couple of people go in there and buy hundreds of thousands of shares, we either be 3 or 4% of that share. That's going to swing that stock either up or down, depending if they're buying or selling. Remember the whole breakdown I gave you about that stocks are more valuable. The value raises when they're less of volume, and then the stock is devalued when there's more of a value, meaning there's more shares of that particular stock. And that's what this group is doing. They've been doing it with GameStop for a very long time. As a matter of fact, talking about GameStop, okay, GameStop to me nowadays is like saying the N-word. That's what it's like saying. Like if somebody say, man, you're a GameStop. I'm like, what you call me? But nonetheless, let me just show you in the past month. Look at this. Now, here's the peak. $331 on March 10th. Let's just say you guys say, hey, man, I look at my portfolio every 3 months. And when we look at this, today they're down $187. What you going to do with that? That's not a long. Now, granted, when I look at GameStop, and the reason why I go ham on GameStop so much with this particular group is because GameStop have closed over 1,000 stores. They have closed over 1,000 stores, and some people may make the argument that, oh, they're moving more online, they're moving more on stream. Well, GameStop has always been digital as well, but people love the fact to go into a store, browse around the games and the different accessories, and get the Game Informer magazine. I'm not a gamer, I'm just saying. All right, what do we have here? We got this one. She says, so if Roku would allow that, it would make them more competitor. Absolutely. Absolutely. If GameStop would put additional code or change their base software, I think, and I could be reaching here, that Roku actually write their own app software where it's not an APK. You get what I'm trying to say? Because I believe the base software of Amazon Fire Stick is Linux, but also it also allows APK. So that means essentially that a lot of their software that's not a good word. Compatible with Google apps. That's the word I'm looking for. They're compatible with Google apps. So when you look at Roku and you look at the sustainability of that particular stock, they're going to have to do something software wise in order to compete with the Fire Stick, because there's not too many people in this space. Think about this. A lot of you guys who used to deal with Kodi, you knew about your Android TV boxes. I used to be a big Kodi guy, getting free streaming TV, but there was a lot of issue with trying to download depositories and do add-ons and this, that, and the other. But that was all based upon Android TV boxes with the Android-based software. So when the Fire Stick came out, again, they made remotes like this, okay? And they made it very sleek. They made it very intuitive. They made it very easy. So I was like, well, I'm going to deal with this. I'm doing all this programming, taking time just to watch TV, where Amazon, they say, hey, unknown sources, third-party app, download what you want to download. Roku is going to have to increase their capacity when it comes to their sticks, like the 4K Fire Stick has done. That's why you see Roku has done that. But when it comes to the proprietary software that they have, they're going to have to open source that software and probably make it a Google-based, APK-based software in order to grow. That's just my belief. That's just my belief. Let's move on. All right. As we're looking at this, a lot of you guys took my advice and invested in Paltar Technologies, okay? And a lot of you guys made money. So let's look at Paltar Technologies, PLTR, I believe. There we go. Okay, they are absolutely down. This is horrendous. Now, when I first had you guys to invest was in the IPO of September 30th, and it came out at $10, and we made some really good money. Did we not? We made some really good money. And that is Pete. Look at Paltar. It was up to $35 a share. Wall Street Bets got it on its list, and look where it is now. Okay, let's look at the last month. They've been down almost 14% the past week, down almost 10%, and today they're down. Where am I at? I think I sold all. Yeah, I sold all of mine because I just saw the future of these stocks, man. I've been watching these stocks, and I have not been happy, and I know why now. Oh, gosh. It says, thinking about buying stocks in Moderna, Paltar, Wells Fargo, Bank of America. You guys can go ahead and read that story. And look at this. Sell at 50%. Sell at 50%. You can't make this stuff up. See, again, I can't stress that this group is either a blessing or a curse. Now, if you into put options, it's a blessing. If you into, if you're into put option, then this is a blessing. If you're into call option, this is a curse. If you're the one of people that you bank on the stock market going down, then this is good. If you're the one who banking on the stock market going up, then this is bad. That's how simple this is. Because with a 50% sale rating of Paltar, and when it came out, this is ridiculous. This is absolutely ridiculous. And let me show you this too. This is why I'm scared of GameStop, and this is why I'm scared of AMC. Like, you shouldn't be a scared investor. You should be an educated, well-informed, but I'm a little frightful of this. Look at this. Let me show you what Robinhood has his ass. Look at this. Hold 50, sell 50. Don't even buy this stock. That's GameStop. Let's look at AMC. Let's look at AMC. What do they say? Hold 50%, sell 50%. Do you understand what I'm talking about? Let's take another stock off this list. Let's do, you know what? Let's do Apple, since Apple is on their list. Let's do Apple. I haven't looked at Apple for quite some time yet. Now, I doubt if Apple is going to be sell at 50%. The number is going to be, ooh. You got to be more careful. Ladies and gentlemen, look at this. So 3 months at this peak, Apple was up to 143. Apple was down to 119. Past month, Apple was up March 16th, 126. Now they're down to 119. Past week, Apple has been consistently down. I don't know what's going on, but I just know the stocks on the Wall Street Bets Group's list, they're not performing. They're either overperforming, overvalued, overbought, or under. See what I mean? I can go with this all day, all the compare and contrast. They're either overvalued, oversold, or overbought. Or they're undervalued, underbought. I mean, this is mayhem. This is chaos. This is anarchy. When you really look at this stuff, okay? Now let's look at one more thing. Let's see here. Analyst rating. Okay. This is normal. Buy at 68%, hold at 24%, sell at 7%. Apple customers will get access to independent repairs in most countries by end of year. Okay. Let's see. Biggest risk facing Apple, Tesla, and other NASDAQ stock, U.S. China cold tech war. Okay. Epic Games files complaint against Apple with UK regulators. And the thing about this, the only way that America can combat this so-called Cold War, I've heard of this, the so-called Cold War against China when it comes to tech stocks, okay, when it comes to tech in general, it says China's cold tech war. What this means, the only way that America wins this war is what America has been doing for the past 8 years. Guess where we get all of our software engineers from? India. We get majority of our software engineers from India. Do some of them come from Japan and China? Yeah, they do, right? Because they're going to get a higher paycheck. But the thing about China is that that country is so enormous with so many people that the true high-level software engineers, they're not coming to America. China are going to keep them right there in the Republic of China so they can keep this warring of tech stocks in the tech world going. I'm just gonna keep it real. Our only raft, our only lifesaver are Indian software engineers, because again, for you and I who want to work for these large Fortune 500 companies, these tech and software engineer companies, they say, well, I can hire you for 150,000, or I can hire this gentleman guy at 80,000. Because what I'm going to do is I'm going to sponsor him coming over here on a visa, on a work visa. So I'm gonna get his work at half the price I would you. I have to pay you 160 grand, and I gotta have a dental package and a 401k matching points and a medical and blah blah blah. No. What I'm gonna do is I'm gonna go get me two of you, okay, that's going to work longer and harder because they're coming from another country where they lack opportunities. So I'm going to say, hey, I was going to have you to work 10 hours, but I'm going to have him to work 12 hours a day at 80 grand. So I'm going to take two for the 160. And because they fall under this visa program, the federal government is going to actually give them Medicare and dental care. You see how this works? America will win this easy. They say this is a war because, again, even though China had probably a lot more people, we're just going to go get our talent from India. This is what we're going to do. That's why you may see in some of your neighborhoods or adjacent communities, you see an influx of people from India. And most of them are doing in what? Two fields that you'll see majority of Indians come over to America: tech and medical. Tech and medical. Yeah, you'll see some lawyers, see some businessmen, you'll see a few Indian restaurants, but this is how we combat this. America say, we can't afford to pay Americans $200,000 for software engineering, but what we could do, take three Indian people, take them from poverty, right, their living conditions, sponsor them on a work visa, and give them all 80 grand a year, and they'd be perfectly fine. And what they'll do is what most Asians in their community do to save a lot of money and build businesses, which, quote, message we can do, is they make their 80 grand, they live in one house, and they save their money. And either they go back to India and start businesses, or they just start a business here and build a house. And here's the thing, age is not a number when it comes to money. See, we keep thinking so immature when it comes to investing in stocks, but this goes way beyond just putting your money in the stock market. Some of you right now, you said, hey, if I could free up $500 a month for the next 3 years, I'll be rich. You know this, you've done the numbers. Some of you actually sat down, you said, you know what? How can I save 10 grand a year? Some of you are just so grown and so mentally, financially immature to say, hey, man, let's just be roommates for 2 years. Let's rent a small townhouse and be roommates. You in school, I'm in the course, you work, whatever. But see, I look at other cultures as I travel the world and I say, that is a good idea. Why are we not doing that? We're so quick to be so damn independent that we're not understanding how these other people are coming to America. Besides they're getting help from the federal government, but there are some strategies that they have that we can actually benefit from. A lot of us don't want to live with nobody else because we're so damn independent. We're so damn grown. But here's the thing. What if you join forces with somebody else? What if you moved in with somebody else? What if somebody was living by themselves, or maybe they had somebody else living in the house and the house had 4 bedrooms? It's like, hey man, how much to rent out a room? Right now I'm paying $1,400. Oh man, $500. $500? You mean to tell me I can save $900? Yes. But see, this is thinking outside the box when it comes to investments and money, because, hey, listen, you're like, hey, man, I just want you to go through the stocks and give me the information. But I should also give you the information to free up more money. These are one of the methods that I give people to get out of debt. Who do you live with? I live by myself. So you have a mortgage, aka rent, renter's insurance, a house insurance. You have car insurance, a car. How can you decrease your bills? Find a roommate. Have somebody moving you. Oh, I can't trust everybody and I don't know everybody. Hey, listen, vet them the best way you can. But the excuses don't make you more money. Last time I used an excuse, no one gave me money. I said, hey, Bill Gates, I would be a billionaire by now, but I had a hard upbringing. Oh, okay. Well, that's an excuse why you're not doing well. Well, it's tangible and it's real, but it's also an excuse. Well, here's $1 billion, Ray. Good job. You don't get money for your excuses. Ms. One says here that, right, Americans are very individualistic. Yes, they are. Michael Williams, he says, this is one of the biggest underlying issues within our community. It has held us back for so long. The inability to work together to reach a common goal. Thank you, Mike. Now let me tell you guys about Mike real quick. Me and Mike grew up, and Mike, if you don't mind, I don't know how many people are watching you. Me and Mike had a very, very upbringing. This is the one. This is the Mike I've been talking about. On him as well as Keith Wall, Mike Williams. We all grew up in poverty. We all grew up in a group home. We didn't grow up with our parents. But I'm not going to tell Mike how much Mike makes. I'll say this. Mike is a high value man. Mike makes well over 6 figures a year. Keith Wall, high value man, makes over 6 figures a year. And we all grew up in Southeast DC, going from one group home to another group home. And then our last group home was called the Jones Program. And we never made no excuses. And I tell you this too. There was actually 5 of us. It was me, Mike, Keith, Sean, and James. 5 of us. We were all friends. But 3 of us made a decision that changed our life and our trajectory of where we are today. If I may, Mike is successful. Keith is successful. I'm doing okay. But Sean and James, let's just say, without beating up my brothers, because I do love those brothers, they're not doing as good as the other 3. And it was based off one decision. We did not want to stay where we were. I remember us sitting down like, hey, man, I'm joining the military. And they say, well, you know, blah, 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 X, Y, and Z. I can't recall all the accounts of the conversation, but we all joined the Marine Corps at the same time. Then from that moment, whether we did 1 enlistment, 2 enlistments, or retired, we took away skills, education, and knowledge in order to be where we are. See, this is what I'm talking about when I'm talking about investments in stocks. The decisions that you make today will affect you 5 or 10 years from now. This is why investing is so important. And guess what? Your decision is an investment in your own future. Your decisions are investment in your own future. Mike says we did it together. Yes, we did. Because when I look back on Marine Corps boot camp, there was 80 people in a platoon where only 50% of us graduated. And out of that 50%, guess who was there? Me, Mike, and Keith. You know why we made it versus other people? Because we knew if we didn't make it through this Marine Corps boot camp, the hardest boot camp in the entire world, I mean, next to Special Forces and Navy SEALs and SAS and Spetsnaz, you get what I'm saying. But basic boot camp for a regular soldier or Marine, the hardest in the world. You know why we made it through? Because when we look back, we don't got nothing to go back to. We had no place to go back to. Our families couldn't support us. They didn't even have the money, the room, the knowledge, anything. So we knew, hey, this is the last straw. Because prior to that, I went to college for 2 years and been an inner city black kid, not knowing too much about anything, didn't even know if I smelled good or bad. I made a lot of bad decisions, but the one decision that we made together have us where we are today. Mike says here, 3 young black men from poverty decided to get a part of the American dream. Indeed, we did. Good morning, Clan Killer 187. And we're just talking about this. He says that the stock market looks like a bloodbath. I have to take it to the chin. And that's what I've been telling people. This stock market today, with this potential group controlling everything, to me, it's really not a good look. It's really not a good look. Because if one group of people can control the financial markets in America, again, it can be looked at as good or bad. So I don't take any excuses of people not willing to sacrifice, not willing to be due diligent in their abilities to achieve greatness or even success. Because again, ladies and gentlemen, your success is not defined by society. Your success is not defined by society. Your success is defined on your own definition. Whatever you believe success is, that is what it is. If you believe that you just having a house and a car is successful, then you will be successful and you have to go and achieve that. If you believe in having 3 houses, 3 cars, then that is what your success level is at. And you have to be willing to go get it. What are you willing to do in order to be successful in your own eyes? Are you willing to sacrifice? Are you willing to move in with another grown-ass man or another grown-ass woman in order to achieve your dreams and goals? That's the question you really should be asking yourself. A lot of times people come to this channel for what? Death methodologies to get out of debt, how to increase their emergency fund. I just did a video out the other day, the quickest ways to pay off your house, all types of financial information. But the true fact and base of financial information has to start with the way you live your life. Some people may say, I have expensive taste. Then if your expensive taste is causing you to be poor, it's causing you to be destitute, then guess what? You need to develop a new taste. If you like your eggs with hot sauce, then you might just want to put pepper in it. That's all I'm saying. You need to develop a new taste. The more you spend is the more you waste when it comes to achieving your goals, dreams, and aspirations and ambitions when it comes to being financially stable. Okay? Killer 187 says it's a double-edged sword at the end of the day. Yes, indeed it is. Michael Williams says, if you ask me what my limits are, I would tell you I haven't reached them yet. What are you willing to do to be successful? That's the question. Because here's the thing, ladies and gentlemen, we can look at stocks all day. But as soon as I show you a Tesla, right? As soon as I show you a Tesla, you tell me I don't have enough money to invest in that. That's what you tell me. But I look down at my portfolio. I say, well, I got at least 5 shares of Tesla. And I can tell you this. from the projects, from the hood, from the slums of Southeast DC. My mother dying at 12. Me never meeting my father. If I can invest in Tesla, so can you. I'm just saying. If you notice, I don't really give you excuses because I know where I come from and I know where I'm going. Well, I think I know where I'm going. At least I have a plan of where I'm going. 2 days from now, I'm going to Jamaica. That's where I'm going. 2 days from now, I'm going to Jamaica, and I can't wait. And of course, I'm going to give you some good content while I'm in Jamaica because I continue to work. I continue to strive. Killer 187 says, Ross, you deserve more than 14,000 subs. You should be at least at 30 subs by now. You know what, Killer? I've said this. I believe that I'm under a shadow ban, why my channel has not been growing, why YouTube is not pushing it to people who want to deal with financial literacy. I don't know. He also says investment is not based overnight. Also, if I sell it all, then I'll lose even more profits. Indeed. And before I end this, ladies and gentlemen, let me just tell you this. The basis of investing are very, very simple. The whole term buy low, sell high. I know it sounds good, but basically what that's saying is when you're looking at a timeline of a stock, if I come back here to the 5-year mark, the point is if I would have bought Tesla at $70 a share 3 years ago, and I look at Tesla today, look at the profitability of that. I would have made $500 off $70. Where was it? Here we go. $70 per share, $500. So the whole term, the reason why IPOs are so important is because you get to buy a stock at its infancy, meaning when it's just released, it's a baby. And as that stock grows up like this, you buy it at an infant and that stock starts to grow up, you start to make hundreds of dollars. So that is the narrative. That is the perspective of buy low, sell high. Just like NEO. NEO is down to what? $35 a share. I'm looking at their innovation. I'm looking at their process development. If I were you, I would go and buy NEO just like I did. You saw me right before your very eyes. I invested $100 in NEO. Now, why did I sell NEO in the first place? Because I made a gamble. I'm not going to lie. I made a gamble and I lost. But look where NEO was. Look where NEO was at. Let me go to past year. NEO at its peak was 62.84. So NEO dropped a little bit less than half, but it dropped tremendously. And I told you one of the major components of investing is headline news. When that story came out that NEO shut down one of their facilities because of the lack of semiconductors, which are microchips, then when you read news like this is very important. NEO confident its plant in Hefei will restart production after a 5-day shutdown. Okay. Then you have your ratings here. But this is one piece of news that everybody was waiting for, because chip makers like Intel, Oracle, NVIDIA, chip makers of that nature, whether it be graphic cards or rather processing, computer processing chips, they're in a shortage right now. But as we come out this shortage and more chip makers get inside the game, companies like NEO will rebound and beat their last price market point. So we saw roughly $63 a share. NEO may reach $100 a share. If you go back and read and look at some of my videos, you will see that. Well, there you have it, ladies and gentlemen. Thank you for staying with me as long as I've been here. I'm trying to reduce a lot of my stock reviews, stock talks down to 15, 20 minutes. But today I went somewhere else with it, and hopefully you got something from that. This is Financial Literacy 101. Learn money and be inspired. You guys have a great day. I'm out.